It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, March the 10th, 2016. Wrapping up this second week of the third month of the year 2016. Hope you guys had a great week with us. Don't forget, I do send out the nightly newsletter on Friday evenings. So next time we have our nightly newsletter will be next Monday. And of course, next week is the beginning of quadruple witching. So make sure you tune in once again on Monday evening and we'll talk all about the plan for next week. You know we have another busy newsletter in store for you guys and gals tonight. Hope you had a great day today. Getting ready for tomorrow, though. Got a lot of stuff to talk about tonight. Some really exciting opportunities coming in after the ECB announcement. And we got crude, S&P, gold, and, of course, the euro. Starting out tonight with oil. Crude oil is bullish after pulling back into the spike and channel correction zone from last night's newsletter. Boy, we nailed that one, didn't we? And a bull channel combined with a recent seller failure tells us to look for buying opportunities on the way up to targets overhead. Boy, today was a great example on crude oil of how technicals continue to lead fundamentals. OPEC came out this morning, announced a postponement of their meeting, and price just collapsed right into the zone that we were waiting for. What a beautiful example of technicals leading fundamentals. We'll talk about that in a second. The E-mini S&P is bullish after a double overshoot sent prices higher this afternoon, but we have a few resistance levels in the way on the ES, so we know the buyers will want to see a pullback before they buy more, which opens the door for sellers to take it lower. This is going to be an interesting, we might see a little bit of some fisticuffs tomorrow between the buyers and buyers and sellers tomorrow morning with the S&P. We'll see what happens. Gold, of course, yellow metal is bullish after the ECB announced another round of quantitative easing this morning. But with three legs higher into a multiple resistance area overhead, we expect professional buyers to wait for a deep correction before looking to buy more tomorrow. Get a real solid looking chart on gold. Looks beautiful. On the euro, the 6E, also quite bullish. We have two spiking channels this evening on the euro chart. You don't see this very often. But we have three legs higher into a measured move resistance zone overhead. So we're going to stay patient for the best opportunities coming around the correction zone waiting below. You know those bears are sniffing around these highs on the euro, and we get a good plan for both sides of the fence for the 6E. Got a good newsletter in store for you guys and gals. Before we jump into our charts, though, and get sorted out for tomorrow, I do want to remind you the only place to watch the full-length newsletter video is right on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, that's wonderful. Make sure you subscribe and watch all the great videos we have on the YouTube channel. But if you want the full-length version of this newsletter, there's a description in the link of the YouTube video. Follow that link. It'll take you over here to sidewaysmarkets.com for the full-length video. While you're here, grab a free pass. Come join me as a guest in our live trade room. In the lower left-hand corner, make sure you register for our nightly newsletter mailing list. That way you'll get an email from me every evening right around 7 o'clock Eastern Time, no later than 8 o'clock Eastern Time, Monday through Thursday evening when the newsletter is ready to be watched. And, of course, you can also download the charts in this video tonight. All the charts you see me using in tonight's video, you can download those by following that link right below the video tonight. And then over on the right-hand side, I would love to teach you more about all the strategies we use, the trading opportunities we find every day in our trade room. I have a trial membership here at schooloftrade.com. It's not the same thing as your free pass. The free pass will give you a ticket into our trade room as a guest. The free trial, of course, will give you a chance to test drive what it feels like to be a student here at SOT. Don't forget, we have been helping new traders longer than anybody else on the interwebs. We've been running our trade room for over 12 years here at School of Trade. I would love to answer all of your questions about membership or charts, data, brokers, whatever questions you have on the right-hand side. We've got someone standing by 24/7, 365. You ready to rock and roll? Tomorrow is a Friday edition in our live trade room. We'll open up at 8 o'clock Eastern Time tomorrow. And, of course, as we always remind you, every Friday morning, Fridays are early in, early out. You're more than welcome to hold positions into the electronic close tomorrow afternoon, but I always recommend on Fridays no entering new positions after 11:30. Typically between about 11 and 11:30, we start seeing price action slow down. 11:30 is my cutoff, though, on Friday, so be aware of that, right? Get out of the office. Go have some fun. Hopefully you'll get some money in your pocket from all the great trades we had this week. Tomorrow morning, Friday, March 11th, the week of very little news, right? I mean, look at this, guys. We only had 1, 2, 3 news events the entire week. You know what that means. That means next week is going to be a big, big week. We'll talk about that on Monday night in the Monday Night's newsletter. First of all, though, March 11th, right, 8:30 a.m. tomorrow morning, we have the import and export prices. It's kind of a yawner. I don't expect to see much out of that news. Sorry to make you yawn as well. You know they're contagious, right? Yeah, those yawns, man. Even hearing somebody yawn, right? Anyways, I don't mean to get everybody tired on the other side of this video. But we know that we have the import-export prices. I wouldn't expect too much. I would expect tomorrow morning, if you're trading the equity markets or if you're trading oil, it's all going to be dominated by the reaction to what we heard from OPEC today. We'll talk about that in a moment. And if you're trading the gold or the euro, it'll probably be dominated by the reaction to Super Mario, right? And of course, the bazooka being fired today at the ECB. So lack of major news tomorrow. Tomorrow feels like it's either going to be a huge mover or it could be a little bit consolidated, right? We'll be ready for both scenarios. And I think we should get started right now. Let's jump in. Looking at charts here for tonight. Again, last newsletter of the week. No newsletter on Friday. Let's start with crude oil. Crude oil is bullish after pulling back into the spike and channel correction zone from last night's newsletter. And a new bull channel combined with recent seller failure tells us to look for buying opportunities on the way to targets overhead. The sellers tried twice to break out of the range this morning, and when they failed, the buyers quickly took control into a bull channel of their own, which now has a rotation target back at the previous high of day, up around that 38.51. What a beautiful example of how the technicals. Now, whenever somebody says, you can't use technicals, really? Look what this last night's newsletter, spike and channel up, right? What was the exact word? Look for the correction zone, right? Look for the correction zone, and you know exactly where we pulled back into. That was before OPEC started flapping their gums, right? Go back and watch last night's newsletter. And when you came in this morning, it was very clear we were trading range bound, right? Definitely trading range bound, but what comes first, the technicals or the fundamentals? I think today closes the book on that conversation, right, for a lot of us, right? Very good example of how accurate technicals are and how the fundamentals are really just kind of the news headlines that everybody keeps talking about. Amazing evidence today of technicals leading fundamentals. Send me an email if you get any questions about that, jj@schooloftrade.com, and I'll go into more information on it. All right. So starting off here right now, you can see here that previous high of day. We watched it this morning in the trade room. We said, how did they miss that previous high of day? How did they miss that previous high of day? Oh, I know how they did, right? OPEC came out and said we're postponing the meeting, and clearly it was read as being a very bearish reaction to it. That bearish reaction that came out this morning from OPEC sent prices pushing lower. A couple ways to look at this right now. First of all, there's an undershoot, right, of that bear channel. That undershoot turned into an overshoot that just never recovered. I look at this more importantly, as a trading range. And since you guys and gals watch my newsletter every night, and earlier on this week we talked about the 2-try rule. 1 try, 2 tries, right? Absolutely, right? 2 tries from the sellers. What does that tell us, by the way? Right? You'll hear me call it a double press, right? Head fake, 2 tries, right? Okay. What is that? That's a very bullish clue. Bullish clue to where? A bullish clue back to the opposite side of the range, right? Rotation target. And where else? Yeah, right? Up to the next range expansion at 38.81. So first big clue for the bulls, the 2-try rule coming out of the range. If you're a member of mine, you know what I'm talking about, right? So 2-try rule, very, very bullish clue. Again, you could look at this as a bear channel that undershot, right, that low, and then of course overshot the high and just never recovered. Now, we then go into our own bull channel here, and you'll notice here we have a new bull channel coming up here right now. We also have a little what I would call a little bull micro here, right? And of course, if you're a student of mine right now, you're screaming, buy this sucker, right? Yeah, right. If you know how to read this chart right now, it's very difficult for you to want to be selling this market. Now, what we do know right now, though, is we have a recent swing here at 37.74. That's going to be an easy area for a trap, right? Probably a little short-term, measured correction back, and then we're looking for seller failure, right, to go back higher here. So 2-try rule, right? 2 tries from the sellers. That's a bullish clue. right? Bull channel coming off this. Really, that bull channel is kind of a clue, but more importantly, this recent bull channel tells us if the sellers don't act fast, we're going to run right back up, and that previous high of day is probably not going to be so lucky, right, as it was earlier this morning. We get a double up target overhead, right? Measured move target overhead, rotation target overhead, a major gap fill overhead. You know, if this market tends to run away tomorrow, major gap fill overhead. We'll look at that tomorrow morning in real time in the trade room, which opens up at 8 a.m. Eastern time. Let's play that game. What if price goes higher? What if price goes lower? If price goes lower, we're looking for bear traps, right? Looking to catch traders on the wrong side of the market to be a buyer down here. If they do hold that pullback, though, right? If they do hold that pullback, expect the sellers to try to retest that low at 37.72. Then we'll look for the buyers to take it higher. If they can't, we look for a measured move going lower. All right. So as we go lower here, right? Again, if we go lower here right now, buyers are going to be drooling over this, looking for the bears to fail, right, to buy it back up. That's what I mean by a bear trap. But if you're a seller out here right now, look for that pullback to hold. And then, of course, your target now is going to be that low, right back to that low. Remember, we do have that channel here, right? So that channel definitely says the target for those sellers is back to 37.22. Then, of course, down to 36.97. What you want to see, though, is if it goes back to that low, though, you definitely can't sell that low. You want to see a bullish correction. If the buyers hold it, they'll reverse it, right? If they don't, if they can't hold it, then, of course, again, there's that measured move, right, for your target on the way down, right? We'll look at that tomorrow morning as well. If price goes higher here right now, all we really have to worry about is this trend line resistance. And, of course, whenever you have resistance like this overhead, you just want to make sure you're not buying into it, right? So, of course, the idea would be a bear trap going lower so we have room to get up to that resistance. If we do push higher here, okay, the ultimate target is really back at that previous high of day. I mean, I know it's the rotation target, but I doubt they're going to stop there. So look for price to break, pull back, hold that resistance as support, right? And then, of course, up to the previous high of day, up to the double up target, up to the measured move target from there. And then, I would imagine at 38.81, that will be where, if we do shoot, that will be where you look for that measured correction back down, right, and then look for that next buying opportunity from there. It's always a little bit tough to predict exactly what happens. That's why we have a live trade room. It opens up tomorrow morning at 8 a.m. Eastern time. But again, the only scenario right now where I'm selling is where we go lower, we hold a pullback and get to that 37.22, right? That's the only real, feels pretty bullish right now. And we'll be looking for more information on that tomorrow morning live in real time in our trade room. Look forward to trading with you tomorrow. On the E-mini, now we are watching the rollover. It's always kind of a question mark as far as when we actually get rollover. There's about 1 million contracts of volume right now, difference between the 316 and the 616. The bottom line is tomorrow, when you get to your desk tomorrow morning, that is after 9 a.m. Eastern time, right, if you're in Asia or if you're in London. But after 9 a.m. Eastern time, 9:30, of course, is the official opening bell. After 9 a.m. tomorrow morning, if you're seeing the 616 with more total volume trading the 316, you're going to want to go trade the 616. I can't do it yet because it hasn't rolled over yet. There's a considerably more volume on the 316 today, so we're not quite there yet. This is always a hard part for me because if I went to the 616 right now, there wouldn't be any volume on it yet. So I have to use the 316 chart. It's the same chart. The prices will be a little bit different. Okay, so this will be another one of those benefits of being with me tomorrow morning in the live trade room. So this is a 316 chart. Check the volume tomorrow when you see the 616 increase more, have more total volume being traded, right, than the 316. That's your clue, right, to make the move forward. Most important thing, though, is the chart fundamentals will be the same. The price will just be a little bit different, right? That'll be the big thing. So here we go. S&P is bullish after a double overshoot. Sent prices, double overshoot. You got to love those. Double overshoot sent prices higher this afternoon. But as you can see, though, we get a couple of resistance levels in the way. So we know buyers will want to see a pullback before they buy more, which, of course, will open the doors for sellers to take it lower. We had 3 legs down on the E-mini this morning, which turned into a double overshoot of the channel lows before the buyers took control with a new bull channel. Buyers are running